Hello, I'm Christian Peter, president of Dark Horse Commercial, and thank you for tuning in for yet another edition of the ultimate guide for Miami warehouse owners, how to sell for top dollar fast. And today we're going to be talking about bonus strategies for tax advantage exits. Now, before we get started, I want to say professional disclaimer, be sure to speak to your tax professional. I am not an accountant, I am not a CPA. So, what we're trying to give you is a little bit of background foundational information about tax advantage exits so that you can be informed and ask the right questions to your tax professional. That being said, let's talk about how to use a 1031 exchange effectively. So for a lot of owners, they want to just sell their property, take the hit in terms of the taxes, and go on about the rest of their life. Maybe it's retirement, maybe it's another venture. But for some folks, they want to defer the capital gains tax to for down the road, right? And possibly maybe never pay it. So one thing about using a 1031 exchange effectively is from the time you sell your property, number one, you have while the property is under contract, you have to make sure that you stipulate that you're going to be exercising your right to utilize a 1031 exchange. At the time of closing, or hopefully before you started your search, you will be required to submit paperwork to identify three properties. Now, you have 45 days from the closing to identify those properties, but if you're smart, you'll get started beforehand. Make sure you have all the right paperwork filled out, but before the closing, and then when you decide on which properties you're going to go after, you have 45 days from closing to do so. And then there's a 6-month window from the date of closing to close on any one of those three properties, if not multiple. So one of the questions that gets asked often, and this is one thing that I decided to ask AI about to give you kind of the most up-to-date information, is if you have to pay taxes, how it works when you utilize a 1031 exchange. How does it work in terms of what you get taxed on? Now, again, I'm going to give the disclaimer a second time. Make sure to speak to your tax professional, but you typically do have to pay taxes on the proceeds from seller financing, right? Because that's one of the things you can do. You could do a 1031 and defer it completely, okay? Or you could do seller financing. So one of the things that you can do with seller financing is you're able to receive the money a little bit at a time. Now, I've heard of people who have not planned appropriately and didn't set enough money aside at closing, and then were hit with a big tax bill. So it's very important you speak to your tax professional. But that being said, generally, in an installment sale, in most seller finance transactions, you'll report the sale as an installment sale, which means you don't have to pay all the taxes on the profit on the capital gains because you haven't received all the money in the year of the sale. Instead, the gain is recognized and taxed over the life of the loan as you receive payments from the buyer. But again, talk to your accountant. This can change from one year to the next. Interest income, any interest you receive from the buyer as part of the financing agreement is considered ordinary income and must be reported on your tax return. Capital gains, you will be subject to capital gains tax on the profit from the sale, but this is recognized incrementally as you receive principal payments, deferring a portion of the tax liability. And then finally, depreciation recapture, if applicable, if you've utilized depreciation. If the property was sold was a depreciable asset like a rental property, you may need to account for the depreciation recapture, which is usually taxed in the year of the sale and typically cannot be deferred. So just again, make sure you speak to your CPA about this and some of the implications, and whether you use a 1031 exchange, whether you do seller financing. It's very important for you to understand the ins and outs, and ask the right questions of the people that are up to date on the tax code. Remember, it's important to consult with them. Like I said, tax codes change from year to year, so it's very important to understand this. But should helpfully give you an idea of some of the ways to think about seller financing if you do decide to go that way. Opportunity zones. There are OZFs. Those are another thing that have been becoming more and more popular called opportunity zone funds. There are ways for you to take them. I'm just going to speak conceptually. I don't want to speak to it on a tax basis again. But you're able to take money out of an asset, out of a real estate asset. I tried to utilize this once, taking money out of the stock market, and it did not apply. So I was unable, even though I was purchasing a property in opportunity zone, I could not create an opportunity zone fund because of the source of the money. But if you're selling another real estate asset and you decide to invest in an opportunity zone, you can create, and it's very simple. You just fill out an IRS form and to create what's called an opportunity zone fund. The nice thing about that is, and the guidelines change over time, but generally speaking, if you hold the building for a certain period of time, I believe it's 7 years, you get about 25 or 30% of the capital gains gets washed when you sell it. If you hold it for 10 years or longer, 100% of the gains gets knocked out. But it's very, very specific. Make sure you speak to your accountant about it. That's what I did. I spoke to my accountant about it when I was purchasing those properties, and unfortunately, I was not applicable because due to the source of where I was purchasing from. But if you're selling an asset and you're looking to invest into an opportunity zone fund, definitely look into what the statistics are today. Those properties that I bought was about 5 years ago, so that things might have changed with tax code, but that's the general concept. Okay. And then finally, as we mentioned a little bit earlier, holding notes or seller financing for tax deferral, right? There are several ways of not taking all the money at once, but I just wanted to give you an idea in this video just of kind of like what you can do, whether it's going to be 1031 exchange, whether it's going to be opportunity zone, whether it's going to be, holding notes or seller financing. Again, make sure you just speak to your tax professional. You're going to hear me say it until I'm blue in the face. But this should give you some ideas so you don't have to pay, so you can somehow cut down on your tax bill come time of sale. Hope that's helped you. And if there's anything else you need, feel free to reach out to us. If you would like an evaluation on your property, we would be more than happy to do so. If you just visit us at www.darkhorse commercial.com. When you land on our homepage, you will see request evaluation. It's one of the buttons right on the homepage. Go ahead and click on that, enter your name, email, and phone number, and we'll reach out to you and get you started with not only a valuation of your building, but also a strategic roadmap as to how we will help you get the maximum amount of dollars for your property. I look forward to speaking to you soon. Thanks so much for tuning in.